Investor's Guide to Stock Charts. There is more than one way to skin a cat, goes the old saying. Quite why someone would want to skin a cat is beyond me. Like the skinning of cats, there is more than one way to picture the supply and demand situation of the stock market. Types of stock chart. Stock charts come in many shapes and sizes, from the differences in the bars to the different concepts applied to the chart itself. Here you will find a reference guide to the many types of chart available with an overview of their potential uses. The line stock chart. This is one of the most basic charts, probably giving the least amount of information. The line in the top pane is drawn using the close price for each unit of time. So if this is a daily line chart, the close price for the day is used. If this is a 5-minute chart, then the close price for each 5 minutes of trading is used. The good. It's a very simple view of the price movement. Good to use when comparing many stocks on the same chart, for example. The bad. It does not show price open, high and low for the trading period. The trading range for the day is important in price-based decision making. The high-low close bar chart, HLC. Using bars is a step up from the line chart, as it allows us to plot additional useful data on the chart. Here we have each bar representing a trading period with the price high, low and close represented. The good. More information is available showing the range of the day's trading. The bad. There is no opening price reflected in this chart. The opening price is important as it allows us to immediately see if the price gapped up or down on open, and also where the closing price is in relation to the opening price. Open, high, low, close bar chart, OHLC. The complete bar chart. The chart of choice for those who like to use bar charts. Here we see the range of the day's trading, including the open price and the close price. The good. We can instantly see if the trading period closed higher or lower than the open. We can also see the length of the bar, which shows us the volatility or the strength of the trend. The bad. There are a few downsides to this type of chart, and it is used by many investors and traders. Most chart packages also allow you to colour the up days green and the down days red. For those who prefer even more information in the price chart, the following charts can also be used. Japanese candlestick charts. Used widely in Japan and gaining a strong foothold in the rest of the world, the Japanese candlestick chart gives an excellent insight into the current and future price movement. Named candlesticks because they look like candlesticks with a wick and a main body. The good. Gives an excellent view of the open, high, low and close of price. It's pictorially illuminating and easy to see trends. There is a full reference of 1 bar to 4 bar patterns which help us to make judgments on the future direction of price. And they connect the psychology with the price pattern. The bad. Although candlesticks have many advantages, they can seem like information overload to the beginner. And there are also many candlestick patterns to learn. Stock charts using volume. The use of volume in technical analysis is important as volume allows us an insight into the supply and demand situation. The following chart incorporates volume into the price window to provide additional information. The price at volume chart. The price at volume chart is an exciting new development, as instead of showing volume for a certain time period, it shows us the volume of trades at a specific price level. This enables us to see what market price level most of the market participants believe the stock is fairly priced. So here you can see what is new is the volume bars are here coming from the left hand side, and you can see that, for example, most trades are occurring at this price level here. And if we were to draw a trend line here, you could perhaps draw one here, another one here, and you could see, for example, this going here. And you can see this level here is a strong area of trading volume, which means it may serve as quite a strong resistance or support level. The good. Innovative and intuitive, this method of charting combined with standard volume bars can enable you to see the market psychology in both time and price. It's also easy to see volume increasing as price rises. This is a very bullish sign. The bad? Not all stock charting packages offer this type of indicator. EquiVolume stock charts. EquiVolume attempts to provide the solution of volume at price in a different way. Instead of plotting volume in separate bars, it is in fact incorporated into the price bars themselves. The wider the price bar, the more shares were traded during that period. For example, here you can see a very wide bar, much wider here than, for example, this bar, and you can see that there on this day there was much higher volume. The good, visually impressive and extremely easy to interpret. The bad, this type of chart can distort the timeline running across the bottom of the chart. This makes drawing accurate trend lines a little more challenging. Also, few stock charting service providers offer EquiVolume. I would not recommend using EquiVolume as a tool. Other stock charts. There are a few other types of chart that you probably have never heard of before. They are, however, quite useful, and you would be required to learn them if you wanted to become a certified technical analyst. The point and figure chart. Point and figure charts are very unusual as they feature no timeline across the bottom horizontal axis. The chart is made up only of price swings. The vertical price bar is arithmetic and shows only units of price. A 0 is plotted if the price moves down, a whole price unit, for example 50 cents. Then when the price changes direction and starts to move upwards, an X is marked in each box. This filters out smaller price moves and enables us to focus on trend quality. Trend lines are always plotted either horizontally or at 45-degree angles, so significantly different from mainstream charts. The good, an excellent tool for doing price target calculations, simple to learn and interpret, and has very few price patterns to learn. The bad. Learning this type of charting can be easiest when performing the chart by hand. This means you marking the X and the 0 on a piece of paper. This can also be very time consuming. Few services offer point and figure charts. However, stockcharts.com offer a free point and figure charting service that is well worth investigating. Market profile charts. Developed in the 1980s by Chicago Board of Trade pit trader J. Peter Stiedelmeier, the letters on the chart show time units. A represents the first 30 minutes of trading. B represents the second 30 minutes of trading. The point of control is the area or price range at which the most trades occur. During the day, the value area is the price range at which 70% of the action happens. When price is above and below the value areas, this represents a possible ideal buying or selling point. The good. People who use market profile charts become evangelists to the cause. They believe it offers unique insights into buy and sell opportunities. This can be a good option if you are a quick-fire day trader, for example. The bad. Can require quite an effort in order to learn how to use them, and very few stock chart services offer this type of charting. Stock chart summary. Some people refer to investing in the stock market as gambling. I do not see it this way. With the vast array of technical and fundamental data available to you, you have a wealth of information at your fingertips. Knowing how to use it is key. As you can see, there are many types of charts. The ones I would recommend are OHLC bar charts, candlestick charts, and price and volume charts.